Look, we're probably unlikely to see the super boom that we saw in those years. Remember, those years were underpinned by incredible demand out of emerging Asia, where they were building lots of roads in the infrastructure. And the world was really going through that, pickup in activity, incredibly strong, and it was really demand-led. Right now, the commodity cycle is actually incredibly interesting. It's really created by supply chain disruptions. The globalization in the last many decades has really brought all the countries together in terms of where we source, where do we get commodities. And then right now, the disruption that's taking place, whether it's caused by COVID, related restrictions in some country, or whether it's due to the current conflict in Ukraine. So all of that together has meant the commodity prices being incredibly high, and resources company is really going through an incredible boom period in terms of the earnings that they generate. Energy on another front is the same. It's essentially caused by a lot of disruption, and now the global economy coming back with a big way. You're seeing the inflation flying away in the US. Just means that demand environment is very strong for the likes of energy, and they are really struggle to supply because no one has really invested in new resources to really dig more commodity out. But of course, this is aside from when we start talking about the conflict in Ukraine, with all the sanctions that's put in place on Russia. Russia, as we know, a big producer of a lot of those energy, as well as a few other metals. And then Ukraine itself is a big producer of a lot of soft commodities. So that has created enormous spike across all commodity space. Prices have come off a little bit since peak, but with all these sanctions in place, it's very unlikely to see those prices return to what they were very quickly. I think decarbonization is a very interesting thematic. It really gathered momentum in the last few years, as most of the headlines you see in the paper, and as well as institutions that is now really catching on to that wave. And now what we're seeing is that there's this significant shortage in terms of energy, and of course there's a few other disruptions. We talked to obviously conflict in Ukraine and a few other things that is creating that kind of shortage. And altogether, it just means that for the time being, the energy prices will be elevated because there hasn't been enough investment into those assets. And it may well, given the sanction that's in place on Russia, that it may well be sustained for longer than what we expect. However, that decarbonization theme, is not likely to go away. We'll see further investment into that space. It's just that we are going through that transition that we just have to learn to live with higher energy prices. Yeah, lithium is a very interesting space that we do pay a lot of attention to. It's done incredibly well, although the share prices of the lithium stock has done very well, but it has become a little bit volatile because of the equity market become more volatile. But I think that theme, it will remain intact for many years to come, because the underlying demand environment for lithium battery has just gone from strength to strength. You've seen so many markets and economies now that have all these commitment to really shift or to EV, or at least partial EV. So the demand environment has expanded enormously, and the existing lithium what we have that has been announced is just not enough. And so really you need the technology to pick up to make the lithium more efficient. At the same time, you kind of need more of them. So that sort of environment does make these sector look incredibly attractive. It's almost like a buy on the dip sort of sector at this point. I love the this whole commodity space because there's so much opportunities, but it depends on the time frame. If we look at longer term time frame, lithium looks incredible, but say next 12 months, it does make the energy sector looks incredibly interesting. It's becoming a bit more volatile because of the disruption, because of conflict of Russia and Ukraine. However, I think once we look past it, you can comfortably say that energy prices will be well supported because of the sanction in place, and because of reopening economies, there will be more jet fuel consumed, there will be more demand for energy with very, very limited supply. I think in terms of the company that's very attractive, say in the energy sector, is Santos our number one pick. We think the business has been significantly undervalued given how much the oil prices has gone up by, and also because of what it's doing is also in that whole decarbonization space is incredibly valuable. So that's our number one pick for oil space. In terms of the lithium space, we like IGO. We think the business holds asset, half of the asset that is probably the most valuable and most attractive lithium asset it has, and the share price hasn't really performed as well as some other more topical lithium names, and we think this one is definitely a defensive lithium play.